All right, let's dive right in. We're going to talk about something that is fundamentally changing how we think about ownership. We're breaking down the wild idea of turning physical, real-world things into digital tokens on a blockchain.
No, really, just stop and think about that for a second. What if you could own a tiny slice of a skyscraper, or a piece of that famous painting, or even a corporate bond, and trade it instantly, right from your phone? Well, that's exactly the world we're stepping into.
So let's be super clear. This isn't about JPEGs or digital collectibles. RWA tokenization is about creating a digital representation of a real, physical thing. Think of it like a digital deed, a certificate of ownership that lives on a super secure and transparent public ledger. And you should know, this is not some niche little corner of the market. We are talking about a potential $30 trillion industry by 2030. A number that big? Well, that's why everybody from Wall Street to regulators is sitting up and paying very, very close attention. Okay, so if this is a revolution, where are we right now? Let's take a look at the actual numbers.
So as of right now, the market has already blown past $30 billion in value that's tracked on-chain, and that's spread across more than 400,000 holders all over the globe. The craziest part? That's almost double what it was just a year ago. The momentum here is absolutely incredible.
In this growth, it's not just coming from a bunch of crypto startups. Nope. The biggest names in traditional finance are making huge moves, and they're bringing all their resources and their credibility right into this space. I mean, just take a look at Franklin Templeton. We're talking about a $1.6 trillion asset manager. This is an absolute giant. And they aren't just, dipping a toe in the water. They are actively expanding their own tokenization platform out onto new blockchains.
Now, what's so interesting here is the bigger picture. Franklin Templeton's fund is a huge player, no doubt, with over $730 million in assets. But look at their competition. BlackRock, the biggest of them all, has a fund that's already soared past $2 billion. You see, this isn't some side experiment anymore. This is a full-blown race between the largest money managers on the planet.
And this quote from their head of digital assets really tells you everything you need to know about their strategy. It's about two things: access and innovation. They want to go where the investors already are, and they see tokenization as the key to unlocking a whole new world of financial products.
You can see this play out with their recent move to the BNB Chain. So why there? Well, sure, the tech is part of it. You need fast transactions and low costs, but it's really about plugging into an ecosystem that already has a massive user base and a ton of liquidity. That's how you scale, and you scale fast.
Of course, you can't just go and reinvent finance without getting the regulators involved. For this whole thing to really go mainstream, you need clear rules. You need investor protections. And one of the true pioneers in this space just cleared a massive, massive hurdle. That pioneer is a company called tZERO. And listen, they've been grinding away at asset tokenization since 2014. That's forever ago in this space, long before it was a buzzword. They've been through it all, and now all that persistence is really starting to pay off.
This timeline really puts their journey in perspective. I mean, they were so early to the game that they got all the heat, including a subpoena from the SEC way back in 2019. But they stuck with it, they worked within the system, and now they've finally gotten a key approval from FINRA.
And just so we're on the same page, FINRA is basically the main referee for brokers in the United States. Their whole job is to protect investors and make sure the market is fair. So yeah, getting their stamp of approval, it's a huge, huge deal for legitimacy and trust.
So what does this approval actually unlock? One word: liquidity. It's the holy grail. As tZERO's president says here, it's what everyone needs. Liquidity just means you can easily buy or sell something without its price going haywire. So for the first time, a company that issues tokenized debt on tZERO's platform can actually offer their investors a regulated place to trade it. It basically turns a hard-to-sell private asset into something liquid.
Okay, so we've got the Wall Street giants jumping in on one side, and we've got the regulators paving the way on the other. So let's zoom back out and see what that actually means for the market today. And the picture is interesting. The total value of all these tokenized assets is growing at a healthy clip, up almost 9% in just the last month. But, and this is the fascinating part, the actual trading volume is down 20%. What does that tell us? It suggests we're in a build and hold phase. People are tokenizing more assets and holding onto them, but maybe the speculative frenzy has cooled off a bit for now.
And the value we're talking about is really significant. Remember the BNB chain that Franklin Templeton just joined? Well, right now, it holds over $500 million in tokenized real-world assets all by itself. That's a huge sign of the scale we're already seeing on these platforms.
When you put it all together, it points to one clear, undeniable trend. The biggest, most established players in finance, they're not just playing around on private test networks anymore. They are actively using public blockchains to build the next generation of finance.
And hey, if you need any more convincing, just listen to Larry Fink. He's the CEO of BlackRock, the largest asset manager in the entire world. He's not mincing words. He's saying the tokenization of all securities is the future of markets. Period.
Which really brings us to the big final question, right? The tech is here. The Wall Street giants are all in. The regulators are building out the rulebook. We've started with things like treasury funds and corporate debt, but really, the possibilities are endless. So what do you think is next? What real-world asset is going to get its digital twin on the blockchain?